This is Dr. Duru from Ahan Analytics with the market breadth. Before I start in on the trading and financial markets info, just want to take a quick moment of condolences for Venezuela from these double earthquakes. Major tragedy, really puts a somber tone on the market events of the week. And the market events this week were really eye-opening and surprising, and I actually can't believe what I'm seeing. We went from bearish market breadth, I've been complaining about it for months, to bullish market breadth. And we even went from a bearish divergence to a bullish divergence all at once. It's very rare to see this kind of switch. And what do I mean by this bullish divergence? Well, let's actually start in the middle, which is Micron's earnings. That's ticker symbol MU. Going into earnings, we had a big tech sell-off. I mean, it just seemed to come out of nowhere. There was no real news, nothing. So maybe just profit taking, right? Because of course, tech and particularly AI trade has had a huge run up this year and, for a while. Anyway, Micron came out with earnings, blockbuster results, and it soared, I think, as much as 18% on the day. It did fade from its intraday high, but still the story was strong. It looked like the AI trade was just, going to resume its momentum all over again. It looked all good. But then the selling resumed on Friday. So that rotation that seemed to get started in the beginning of the week resumed on Friday. Even Micron lost a few percentages. And a lot of AI trades and semiconductor trades also came down. And I'll show you in the charts to really pull together this story. I think it's going to be very important for us to pay attention to what's going on, because I think this narrative, this theme is going to dominate trading for the summer. So again, just as a quick summary, where are we now? Market breadth is bullish, but the major indices, S&P 500 and the NASDAQ, believe it or not, particularly the NASDAQ, are bearish. And because of the way I define divergences, I always lead with the story. I lead with market breadth story. So since market breadth is bullish, then I look at the bearishness in the major indices as being kind of laggards that are trying to catch up. So this is a bullish divergence. So I'm not bearish. I'm actually somewhat bullish on the market. I haven't decided where I'm going to fall out on the short-term trading call. Probably going to stay neutral just because I see some other precariousness in the market. But anyway, like I said, this rotation rolled out this week, but it could roll right back the next week. This is what I mean by it could dominate the theme of trading for the summer. And it's also why I'm not quite ready to just be bullish, because I think there could be this pendulum swinging back and forth. And there may be no reason at all, no news that drives it. It just is. It just is the pricing dynamics. So anyway, like I said, let's go into these charts that will describe the story very clearly and distinctly. Start with my favorite technical indicator, the percentage of stocks traded above their 50-day moving averages, what I like to call AT50. Here is the big breakout. I love it. This was the previous downtrend line here. That's this purple diagonal line. Downtrend is no longer intact, so I'm going to remove that. And if you recall from previous videos, I said I've been waiting for this to resolve either to the upside or to the downside, and I predicted it would happen within weeks, if not days, and sure enough, it happened within a week and a half. So that's good. This is the context. Market breadth is no longer bearish. It is bullish, and normally I wouldn't even call it bullish, but it's breaking out of a downtrend, so that's why I'm calling it bullish. Let's take a look at the percentage of stocks trading above their 200-day moving averages, and sure enough, it too has broken out. It's still in the orbit of this pivot line, which is this horizontal purple line that's drawn at about 56%, but it closed at 58.2%. It looks like it's ready to rally up. And sorry, let me go back to AT50. AT50 closed at 58.1%. So hopefully it won't shoot up too fast, too far, because I don't want to have to deal with the overbought conditions, which could introduce more bearish trading. So one step at a time. All right, let's go to the S&P 500. And you can see, I'll show you the bearishness now. So remember, I said there's a bullish divergence. Market breadth leads my technical read of the market. Here's the S&P 500. And you can see here that it has closed. It broke down below the 50-day moving average 3 straight times. And the first 2 times, actually, let's go all the way back to Tuesday. Tuesday was the big down day, 1.4%. Tech was a big reason that the S&P 500 went down. Let me just draw in a big arrow so you can see what I'm talking about. This was the big down day. And then the next 2 days, Wednesday and Thursday, we had 2 more tests of the 50-day moving average, and buyers successfully defended that support. Then today, June 25th, Friday, June 26th, Friday, you could see here that the S&P 500 gap below, and buyers spend most of the rest of the day, let me just zoom in again, climbing back up, but they could not quite recover 50-day moving average support. And that means that this breakdown represents the first time that the S&P 500 is traded below its 50-day moving average since, guess what? The big gap up on April 8th when the first ceasefire in the Iran war was announced. So this is an important moment on the technical basis, particularly now that the 20-day moving average dash line here is trending down. But you can see it hasn't yet even broken the low from June. So until that low breaks, until the S&P 500 breaks below this low, and that's where you could look at this green circle here, it is not fully bearish. I don't know if that makes sense. So it has started a bearish move, but I wouldn't consider it confirmed. That's what I meant. Confirmed bearish until it breaks to a new low. So those are the conditions. The way things are trading right now, I don't see a new low happening, but of course we'll see what unfolds in the coming days and weeks. The NASDAQ is more convincingly bearish. You could see here earlier in June, I drew this green circle. The NASDAQ successfully defended 50-day moving average 3 times. That was pretty impressive, and it led to this big gap up. But now we roll to this current week, and look at this. The NASDAQ, after it dropped this big down day on Tuesday, it dropped 2.2%. It never recovered. Tech has been under pressure, primarily AI stocks, the entire week. And this was the day that it looked like at first that Micron's earnings, big blockbuster earnings, had saved the day. The NASDAQ gapped up, but look at that. It stopped perfectly. And again, let me just make sure you can see this. It gapped up perfectly to resistance at the 50-day moving average. And then sellers took over and took it down, and the NASDAQ has not recovered. So the NASDAQ has confirmed its 50-day moving average breakdown. And look at this. Look at the low. Actually, let me just draw a line there so it can be very clear. This was the low in June, and the NASDAQ has not quite closed below it. So remember what I said, I don't consider the bearishness confirmed until a new low occurs. And the NASDAQ is currently now fighting against that new low. Look at this. And this is why I love technicals so much. On Thursday, the buyers bounced it off. And today, Friday, it broke down, and then the buyers recovered that. So what I'm going to be looking for in the coming week is, can the buyers continue to defend this and then finally get above the 50-day moving average? So that's the bearish setup for the S&P 500 and NASDAQ. But now the small caps, IWM, the ETF of small caps, is just as bullish as it wants to be, well above the former double top. I just extended the line there. And in fact, it closed at a new all-time high. And that's what makes me feel better about calling a bullish divergence, is that we have one of these major indices, the small caps, looking bullish. And it is at an all-time high. And that's a further confirmation. Let's take a look at the VIX. The VIX, the Volatility Index, is still above this pre-tariff low. It's still in this churn area, so it could still pop at any time. So I'm a little wary and cautious on that. But otherwise, there's not a lot to be concerned about here. So overall, the bullish divergence looks like it's in play. Right, so let's jump into Micron Technology, ticker symbol MU. Here's the big move. It closed post earnings on Thursday with a 15.7% gain, but on Friday it faded back with a 6.7% loss. Now, this is a lot of churn in the middle of a monstrous uptrend, right? So let's make sure we have that perspective. Micron is as bullish as it can be, and this 20-day moving average uptrend has not been disturbed ever since the breakout way back in April, okay? But Micron is a leader by far, and the other parts of this ecosystem are struggling. So Micron's fade was actually very bad for other parts of the market. Let me go to SMH first. This is VanEck Semiconductor ETF, ticker symbol SMH. You can see here that Micron, despite its big day on Thursday, the whole semiconductor ETF stopped far short of its all-time high. That was here. Let me just put a circle there. And you can see very clearly on Thursday, yes, it was a nice up day, 2.9% gain, but it faded from the intraday high, and it did not even come close to its all-time high, unlike what Micron did. So that means the sector is lagging behind its leader. Moreover, SMH, as Micron pulled back 6.7%, the SMH pulled back let's just call it 4.0%, and closed below its 20-day moving average again. So overall, and let me just draw a box so you can be clear, there is a lot of churn now going on in the semiconductor space. Micron as a leader is, if you just look at Micron and others like it, you might miss what's going on, what the overall narrative is. It looks like semiconductors are starting to slow down. Okay, so this is going to be what I'm going to be looking at and focusing on for the rest of the summer. Is this churn just going to continue? Is it going to break down below this box? Is it going to break out to new all-time highs? That's going to be critical. And of course, semiconductors are at the core of the AI trade. As I mentioned earlier, I'm going to start looking at ticker symbol AIS. This is the VistaShares Artificial Intelligence Supercycle ETF. It, of course, mirrors the semiconductor index very closely because it's dominated now by semiconductor plays. It's hanging on to its 20-day moving average support. But just like the semiconductor index, you can see it's very similar, stopped short of its all-time high, and now it's struggling to hold on. And this will be my indicator of the overall AI trade, even though, of course, it is dominated and is closely correlated to semiconductors. Now, the news, I think, in the semiconductor space was On Semiconductor Corporation. Its plans to acquire Synaptics. And clearly, investors and traders did not like that news at all. The stock dropped 23.7%. Big time 50-day moving average breakdown, well below its lower Bollinger Band, which is this black line. And that's a bearish move. It's overextended to the downside, so I wouldn't be surprised if it rebounds. But, given, in fact, let me just be clear, given it's breaking down below, let's see, this earlier churn area, it's not looking good for the stock, right? It's going to take a lot of work to just get back into this box and a lot more work to get back to the uptrend. All right, so let's continue on here. NVIDIA, too, has me concerned. I made some unsuccessful trades in it, and I'm just now noticing that overall, since its new all-time high in May, it has been churning downwards. So much so that it's now challenging the 200-day moving average support once again. And overall, NVIDIA has gone nowhere. It's back to going nowhere since, actually, let's just call this a very wide trading range, right? Going all the way back to last summer. So NVIDIA is getting tougher and tougher to trade. It's just churning a lot, flipping and flapping and flailing a lot. It's probably not one to trade anymore, and time to move on to other better parts of the AI ecosystem. Qualcomm is another semiconductor trade that when I pull back, I realized, wait a second, this thing is topping out. So here's Qualcomm, and let me again draw the nasty red box here. Not only did it break down below its 50-day moving average today, but it also, if we pull back, we can see that it is essentially making a topping action. It broke out to new all-time highs, but now has lost momentum. Okay, hopefully that's clear. And let me change the indices back here to auto fit. Okay, so Qualcomm is a no touch. It looks like it's topping out, but of course I will keep an eye on this. Now, I said earlier, the NASDAQ is in bearish territory. And it's right on the edge of confirming its bearishness. The MAG 7, this is Roundhill Magnificent 7 ETF. The MAGS is the ticker symbol, MAGS. You can see it has been bearish for the last week and a half. It broke down below its 200-day moving average and has been trending down all month long, all the month of June long. So ironically, you know that sell in May and go away? Well, it hasn't worked in many years, and it certainly hasn't worked for the overall stock market, but for the MAG 7, for MAGs, it has worked like a charm. If you got out of MAGs in May, you're looking pretty good and you're ready to redeploy cash somewhere else, or maybe even to buy the dip in MAGs. Now, one of the big stories this past week in terms of the MAG suffering was Apple, and this was connected to Micron. Okay, so Micron had a big up day, but Apple had a big down day. It had one of its biggest down days I think I heard in over a year, maybe 2 years. It dropped on Thursday by 6.1%, and this is because they announced some major price increases on the iPad and on MacBooks. And the concern, of course, is that will create demand destruction. Now, I don't know whether the narrative completely flipped the next day, but Apple surged 3.1%. Clearly, there are a bunch of buyers that thought this was overdone. You can see down here in the volume bar. Let me just make sure you're looking at it. Big move, surge in buying power. So this could be a bottom in Apple. I'm very curious to keep an eye on this, because if Apple manages to reverse these losses from Thursday and break out above 50-day moving average, I want to aggressively buy Apple, because it means that the market is already putting behind it this bad news about price increases, and may even flip the narrative and make it into a positive thing that Apple is somehow going to make more money because of these price increases. Now, Apple wasn't the only big cap tech stock to jump big on Friday. Microsoft, okay, let's just pull back a little bit. Microsoft is just, it's just terrible. It's technically broken. It even broke down below this downtrend line that I drew out, I think a week or two ago. I was hoping that it would rebound. It didn't. It's broken down below its 50-day moving average earlier in June, and it was accelerating to the downside until today. In fact, it's hard to see that. Let me just scroll up. You can see it gapped up today, Friday, and gained 5.7%, but it stopped short right at that former downtrend line. So I'm hopeful that this is a bottom for Microsoft, but I am not optimistic. There's a lot of churn in trading, and it's going to be very easy to get whipsawed back and forth with this kind of chop. All right, let me now use Microsoft as a segue to the software sector. Of course, Microsoft is also an AI play, but it's also in the software sector. IGV, the iShares Expanded Tech-Software Sector ETF, it also had a big rebound day after selling off for most of June. Big rebound day, 4.1%. A lot of my software plays benefited by that much and more, which is great to see. But I'm afraid this is maybe just a dead cat bounce after so much persistent selling. At some point, the sellers get tired of selling. They take a break. The buyers step into the vacuum, and things just kind of naturally go up. I don't believe in this bounce until I can see it break out again above its 50-day moving average. Even though, I am bullish, I think that the selling has been overdone in software, but I'm also realistic and pragmatic when it comes to what the technicals are telling me. Palantir, to me, was the biggest software news of the week, because on Monday, big time breakdown, it fell 7.0% on news that France is going to phase out the software in favor of its own domestic intelligence software company, Chaps Vision. Just as a reminder, this was an important line because it was a 52-week low the previous week that Palantir have been bouncing off of several times ever since February. It has been bouncing off this line. It finally gave it up. So Palantir is actually in a major topping action. In fact, if I pull this back, you can see very clearly. Let me get rid of the drawings. Let's go to the 1 week view so you can get a clear sense. This is a topping action. I won't draw in the curve, but hopefully you can see the cursor. This is slowly but surely Palantir is rolling over. I now make Palantir a no touch until not only does it get back over this support line, but I want it to get back above its 50-day moving average again, okay? I don't want to short Palantir, at least not here, but I definitely don't want to go long until this stock repairs itself. Right now, Palantir is a broken stock. Another broken stock, Figma, ticker symbol FIG. You can go back to my previous video or blog to see what I was saying about it. I really was hopeful that this breakout on earnings was a strong positive, but it got caught up in all the selling in June from software, and you can see this persistent. Again, let me just draw this line so it's very clear. Just a persistent selling, right? Straight down, rested for a bit, and then more selling this week. And now Figma is testing its all-time lows. It benefited from today's huge rebound. It was up 10.6%. That's great. I actually have a position in it. I've sold calls against my position. I benefited from selling those calls. So it's sort of that has helped ease some of the pain, but it's still painful overall. I was a latecomer to Figma. I avoided, all the IPO hype and thought I got in at a good time, but Figma is just a plain old broken stock. If it gets back above its 50-day moving average soon, I will believe that it is back to the bearish to bullish reversal that I thought it was on earlier. Now, in the beginning, I talked about how there's a rotation going on. Here is some of the rotation to consumer-facing stocks. We have like consumer staples like Hormel, ticker symbol HRL. Foods had a very strong week today, straight up practically. It jumped from, 24 all the way to 26.5. So that's about a 10% gain. That's doing very well for a stock like Hormel because look, it has been on a straight downtrend since 2022. So I'm not saying that this stock is bullish per se, but I do like it in terms of the rotation that's going on. And in terms of inflation being sticky, I think these kinds of consumer staples are a good part of my portfolio. The dividend yield is also substantial, and so I'm enjoying that. I bought Hormel, I can't remember, on this, but it caught my attention on this bullish breakout. I bought it somewhere either in here or when it pulled back towards the 20-day moving average. So take a look at your consumer staples as potential things to provide ballast to the portfolio. I talked about Robin Gourmet Burgers. This thing continues to follow through. I explained why I was going to hold on despite the overextended breakout from the box, and that holding on worked out really well with this rotation into consumer-facing stocks. Red Robin gained another 10.8% on Friday. It is now, let's check it out. It is now climbing above its previous churn and peak area and is heading towards prices it's last seen in 2024. So that's very positive. I'm still going to continue to hold on. And then finally, another consumer-facing stock, homebuilders. Big news last week was the passing of the 21st Century Road to Housing Act. And the final bill, passed both parts of Congress, Senate and House, now waiting for the final approval. There's some drama going on. I won't go into that now, but just know that the big thing with ITB, this is iShares US Construction ETF, ticker symbol ITB. It has finally broken out of its bear market. It's barely broken out above its bear market, but it's still a positive. And as you can see, if I pull back this chart, you can see it's done a lot of fake outs. It could go back into a bear market very easily just because the data in the housing market is very bad, but this is still a good technical moment. And I'll have more to say about this in the blog. I don't have time to go into it into the video, but there's some specific strategic things that I've now been changing as a result of some major moves in the housing market. All right, let's go to some other assorted stocks really quick and finish this off. Shoulder Innovations. It's hard to find these days, but this is an IPO that's now working very well. Ticker symbol SI, new all-time highs. Fortunately, I noticed it on this big up day. June 23rd? It went up 8.6%. This is the power of keeping your price alerts active. I can't remember. I think I had it trigger on a 7% move. I had ignored it earlier because it was overextended, but it pulled back nicely. And then this follow-up move here convinced me to go ahead and buy in. And sure enough, buyers have stepped in, and it's at new all-time highs. The momentum looks good. You could see on Friday, huge surge of buying volume. I think this stock is going to continue, even if it pulls back. I am just going to hang in there and see just how far the buying goes. Maybe there's even some good news at the other end of this. Bad news is in crypto land. Let's start with strategy. I talked about it last week. I have to bring it up again because in general, I think the new crypto winter, so to speak, is dragging also on sentiment and tech in general. It also is interesting to see these dynamics that MicroStrategy, ticker symbol MSTR, has just been sold off every single day since the last fake out rebound. This is like a dead cat bounce on January 15th, and it is sold off every single day. You can see the red bars. In fact, let me pull this up so you can see every recovery has been beat down. This is a stock that's not just damaged, but it looks like people are afraid of something really bad is up ahead. So I am keeping an eye on MicroStrategy. I have been doing options puts all the way down here. I did it again on Thursday. I actually did a hedge play because I thought that this thing is ripe for a fast rebound, but it doesn't look like a rebound is coming. And just to give some perspective now, MicroStrategy is well off its all-time highs. I think, well above 500. It's now below 100. Closed at 82 on Friday. It hasn't seen this price since February of 2024, and it's closing, basically reversing. There was a huge period where MicroStrategy, along with Bitcoin, surged after the inauguration because of the anticipation of good crypto news. And now MicroStrategy is essentially reversed all of those gains, and it looks like it could break down even worse just because of this momentum. And I'll just call your attention to the trading volume. You see how that's increasing? There is an acceleration to the downside. And let me just conclude with background with Bitcoin. Sorry about that. Just to give the context as to what's going on. I mean, why the selling in MicroStrategy looks even worse than what it looks, because Bitcoin, yes, it is back into wintertime, but it is actually struggling. It has been bouncing around these important technical levels I talked about way back here when I declared a bottom for Bitcoin. Bitcoin has actually been maintaining those bottoms. Now, it looks like a very precarious struggle, but nonetheless, the line is holding. Meanwhile, MicroStrategies continue to slice lower, right? So that divergence tells me that something special about MicroStrategy is going on, and it's not looking good. Meanwhile, I am on the edge of my seat to see whether Bitcoin can actually survive another test of this bottom. It doesn't look good. You can see, actually, let's pull this up so you can see closely that sellers have broken this important line multiple times in the past week, and buyers have pushed it back up. But I think that buying momentum is starting to wane, and that's what has me concerned, at least for Bitcoin. All right, that's it. Thanks for hanging in there. This has been Market Breadth, and subscribe to this channel if you want to get more videos. Always like and share so the algorithm knows what's up. And if you have any comments or questions, please put them down below. Until the next time, please take care, trade safely, invest safely, and make sure that you remember that this is for informational purposes. Please trade and invest according to your own risk tolerances and time horizons. Take care.